one of our top 10 stocks yesterday as well. Was one of the top gainers today, also continues to do well. HDFC, AMC, Canara Bank. There are many stocks doing well. Emphasis is making a bit of a comeback, so keep an eye on that as well. Hiren Ved, CEO, Director and CIO at Alchemy Capital Management is now joining us. Hiren, good morning. Thanks for joining us. Hiren, so how are you approaching this market at this parabola kind of a phase that we are going through?
I think we continue to remain quite constructive on the market, Anuj. And as I've said in the past that, we believe that it's not just a matter of liquidity, but I think that the strong earnings growth, which is propelling the market, our belief is that the next couple of years, the earnings of corporate India will surprise people on the upside, just like it did in a pandemic year like 2021. And therefore, there is a fundamental basis to this rally, and not just, liquidity as most people would have it believe.
Okay. Hiren, hi, good morning. I was going through the list of stocks and sectors that you like, and NBFCs and home finance is clearly a space that you're very bullish on for the longer term. Would you stick with the larger guys like Bajaj Finance and in the home finance space, HDFCs of the world, or are you looking outside the index?
So, Sonia, I think when it comes to financials, we at this point in time have stuck to the bigger guys. And to be very specific, our belief is that the financial services industry is likely to see a very large disruption, from technology companies. And therefore, we would not just like to be invested in companies which were traditionally strong on the liability and asset side, but also have a very strong digital footprint and capabilities. Because I think that's going to define how value is going to be made over the next couple of years. So while traditional banks still have a very strong hold on the liability side because they can accept deposits which fintech companies cannot, but I think on the asset side there's likely to be more competition. And that's where I think that more digitally savvy companies are likely to continue to gain share in this space. So, our preference has been towards the Bajaj Twins and ICICI Bank in this space.
Okay, and they have done really well, haven't they? Hiren, good morning. Great to have you on the show today. I just want to go back to the point you made, and that was an interesting one, that corporate earnings can actually surprise on the upside. So you tell us, where in the market, which sectors do you expect this positive surprise that perhaps has not yet been fully appreciated in terms of stock price movement?
So I think, if you look at, aggregate earnings in our belief for the next 3 years should compound in excess of 30%. What will contribute incrementally from here to earnings are sectors which are actually being not doing anything for the last couple of years. So while your traditional sectors like consumers will continue to do well, but that's reasonably well discounted in the marketplace. I think IT should continue to surprise, though I think now people have realized that it's in a structural bull move. Obviously, banks and financials is one area. They took the brunt of the provisions in 2021. So I think as we come out of that, you will see a positive swing in earnings in financial services and banks. But if you look at the traditional sectors like real estate, for example, which didn't do anything significantly, or if you look at autos, heavy commercials, if you look at, cement, I think these are sectors which are likely to do very well. Metals, I think metals will be a very big contributor to swing in profitability over the next couple of years. So I think there is still space in, I would say that the more consumer discretionary or sectors which got most impacted by COVID. And then there are new emerging sectors which have not done well for a very long period of time, like metals and infrastructure, real estate, and financials. I think these are likely to contribute significantly to the upside in earnings over the next couple of years.
Okay, you discussed the traditional sectors. I want to discuss some of these new phenomena in the market and exchanges, Hiren, whether it's or the market intermediaries. We have seen IEX, MCX, BSE has done well, CDSL, CAMS, all these stocks doing well. How would you view all of these stocks?
I think these platform companies, exchanges or platform businesses have very superior return on capital characteristics. We believe that there is an opportunity to make money there. Many of these stocks that you mentioned, are benefiting from increased financialization that we are seeing. And we continue to be bullish on these platform companies. We do own one of the exchanges in our portfolio, and we think that this is just the beginning. As more and more money comes into in financial assets, these platforms will make a lot of money. The other area which is quite interesting, you mentioned exchanges, but I think that we believe that online insurance brokers is an interesting space. Online wealth, wealth tech businesses is an area of interest. I think we're seeing a lot of new customer acquisitions that are happening there, and I think this is a long-term structural trend. So, whether it is companies like ISEC or angel broking, in exchanges, companies like MCX, I think we continue to be very, very positive. And there are several more that we don't own, but, we believe that that's an area which will do exceedingly well.
Okay, the other space that you really like, Hiren, is this quick service restaurants, right? And the consumption space. Are we looking at higher levels for names like, say, a Jubilant Food, specialty restaurants? I mean, how do you approach that space now? Because there's not much valuation comfort there.
Yeah, I agree, Sonia. I think some of them, franchises are very, are extremely well priced. But I think the runway for opportunity is also significantly big. And I think these businesses have also found that, they can improve their cost structures with a larger part of their business now coming from deliveries, right? Plus, I think dine-in is yet to recover fully. Some of that is priced in, but I still believe that there is an opportunity. It's a big white space in the QSR opportunity, and we continue to be very, very bullish on this space. So I think valuations, though, may seem to be higher, but I think growth will compensate for that over the next few years.
Okay, growth may compensate for over next 2 years. That's the call. Just looking at some names, there's some correction in some of these stocks. Finally, like Navin Fluorine, etc. Hiren, specialty chemicals has been such a massive space, and it's big now. Till about 2-3 years back, it was seen as some kind of a seasonal play, but it's really become core of many portfolios. Do you like any stock here?
Yeah, I mean, Anuj, we do like this space. I think that the specialty chemical space is going to have a 10-year runway of growth. I think that if you look at the global landscape and supply chain, you will find that probably outside of China, India is the only country where these businesses can significantly scale. The ROICs are very attractive in this business. And I think as global supply chains get rerouted with China +1, plus there is a huge need for import substitution in chemicals and APIs. And therefore, we really like this space. We think that, it could be the next big export industry, in my opinion, after IT services that we've seen over the last 20. IT services and generic pharma. I think this is the third large industry that India will create in many, many years to come. So yes, we like the space. We have exposure there in the space, and we believe that while valuations, again, have caught up very aggressively in the sector. But if you take a 3 to 5 year view, I think there is still a lot of money to be made.
I wanted to ask you how to approach autos now, because I mean, I heard you briefly mention it earlier, but this is a space that has been, hit with so many problems, right? The semiconductor issue is not going anywhere anytime soon, and demand continues to be sticky. The ownership cost has gone up. Are you still bullish here, or do you think that it's time to get cautious?
So I think, Sonia, this is one area which actually stand out as, though many ancillaries have done quite well, but I think the auto OEMs haven't done as well, in the recovery. And I think there are a couple of things happening in the auto space. One you mentioned about the chip shortage, which I think is more of a short to medium term challenge. But I also believe that there is an opportunity over the next 2 to 3 years because, autos will come back in a very big way. The other disruption is electric vehicle, the whole electrification. It's a long-term trend, and how each company position itself in this trend is likely to be extremely important. It's a long-term trend, and how each company position itself in this trend is likely to be extremely important. So we'll have to pick and choose companies that you think are going to be winners in this game. And I think maybe the chip shortage could be a hangover on these businesses for some time. But if you're a long-term investor, you should actually I would look at this as an entry point, into some of these names, because that's the only area of the market which has not gone up and where there is valuation comfort.
Okay, got that, Hiren. We'll leave it at that. We've gone on for a goodish bit, but thanks a lot for giving us your thoughts. That's the word coming in on the market, which, by the way, is seeing some amount of profit taking right now. Nothing alarming. I mean, the Sensex is down about 90 odd points, pales in comparison to the rally that we've seen. But nevertheless, some money being taken off the table. A lot of, stocks that have gained. Of course, SBI Life